Good morning, everybody. Last week, I wrote and talked about impressive fourth quarter tech earnings, and this week I want to talk about the same for the retail sector. A number of noteworthy retailers have reported fiscal year fourth quarter earnings in the last week, and the numbers show the same thing as the tech earnings showed, namely recovery. Same-store sales growth has improved at a number of chains such as Home Depot, Lowe's, Target, Nordstrom's, Macy's, and on and on. And one of the tells that I especially like to look at is same-store sales at Walmart versus same-store sales at Target. Now, I've included a chart attached to the client note, and what it shows is that prior to the Great Recession, Target was significantly outperforming Walmart. Then what happened is Target same-store sales peaked in the third quarter of 2007, and after that they really tanked. At the same time, Walmart's same-store sales surged. This is because as people saw they were losing their houses, losing their jobs, watching their stock market portfolios go down, the value of their homes go down, people started pinching pennies. They started saving money, and they shifted their spending from something a little bit more upscale like Target to something much more price conscious, the price leader in Walmart. But that has now reversed itself over the last 3 quarters. If you look at the chart, you can see that Walmart same-store sales have been negative the last 3 quarters, and Target's have really rallied the last 2 quarters, reaching positive territory for the quarter ended January 31st, 2010, for the first time in 2 years. Yesterday we had February same-store sales from the chain stores, and the same thing. We got very strong February same-store sales, and so what we're seeing right here is a recovery in the retailers, just like we saw in the tech. And what it all adds up to is a recovery. What sort of recovery, I'm not going to say right now, but it's undeniably a recovery. Companies are increasing their revenues, they're increasing their earnings, and there's a huge pickup in business activity. Now I just want to make a quick comment about the market activity. We've seen a nice little rally over the last 4 weeks. The S&P has rallied about 80 points from 1050 to 1130. It's probably about 8% from the low on Friday, February 5th. But notably, the volume has been absolutely pathetic on this rally. In fact, only 1 out of the 20 trading days over the last 4 weeks has shown above average volume, and that was Tuesday, February 9th. In fact, the 4 days this week have all shown below average volume, in excess of 10% below the yearly average New York Stock Exchange composite volume. So I think what we're seeing right now is that we're in a range defined by the low from Friday, February 5th, around 1050, and the high from January 19th, around 1150. And we should be trading in a range right there, as both of those highs and lows were accompanied by heavy volume.